Good morning, good afternoon, and good evening. One day away from TGIF. All right, let's see where Mr. and Mrs. Swiss is at this morning. There it is right there. Let's get the fact check spreadsheet up there. I see it's shrunk down. Let's try that. We got there we go. And then we try to bring it down. Ta-da! There we are. As you can see, the Swiss is trying to move back up again. The dollar seems to be firm as usual. I guess as usual of late. Let's put it this way. I'm not a big king dollar person. I always like to look at the markets, specifically currencies in particular. I like to look at them from a, like I call it, a Euro view or Eurocentric. I like to look at it like as if I'm not living in the States and trying to understand the market's view from afar. It makes it a lot easier to dialogue about it, that's for sure. But we see here the euro, in this case here, the Swiss, when it goes up, that means the dollar is going up in value and the Swiss is losing value and vice versa. So that's pretty cool. Now what is that? Let's get rid of that. There we are. And what we're seeing here, and let's try it over here too. Let's take a look at it. That's the dollar index, actually right above it on the Chicago Quant chart. If I can get a hold of that, like so. As you can see, there it is. You know, it's moving up for the last couple of days. And you can see the weekly is holding up very well there. And we shoot back to the J4X, and you can see that the Swiss itself is trying to move up with the hinky asking. Hey, Alan, how you doing? Hey, that was great yesterday on the data on the what's the expiration on the options today, right? Thursday expiration. Alan likes to follow the Alan Tommy likes to follow open interest. In other words, everybody has a general idea what open interest is, and in the options market. So, AT Alan Tommy AT follows the open interest and looks at the strike price. Now, I know it's that spooky word, strike price, but what that really means comes down to is like AT was watching. Let's go over to it real quick since AT is here, and was watching the yen and saw how the yen was orbiting around the 110 area, and goes and looks at the open interest. What is the greatest amount, the largest amount of open interest on options? And sure enough, it was 110. It was the 110 calls and puts, I assume. And AT is looking at the open interest. What is the largest position? And then you look at how much open interest it is, and then you can just put a simple calculator to it, and it came out to be like $4 billion worth, or a little bit greater than $4 billion. And so that's why you can see currencies get parked for a little while until the expiration, when the option expires and the open interest disappears and it gets exercised into the actual cash itself. And then vice versa, same thing occurred with Aussie. Let's go find the Aussie. It was the same situation. Over 3.4 billion seemed to be parked around the 75 area here, right there. There's the 75 area right there. That's that line right there. And let's put a little sideways line to it like that. And sure enough, open interest was around $3.4 billion, which expires going into today or tomorrow. And that's why they parked themselves around those numbers. And AT, Alan Tommy, likes to follow those, which is a really smart thing to do when you're you're flying, you're trying to trade and try to figure out why things get parked around there, and you think it might be going to break out, and the next thing you know, it goes back down. You're like, get stopped out when you're using the hard delta. Now, if you're using binary options or option spreads, it's a different game. You can't get stopped out because you're buying those things, and you have a very limited risk with a not an unlimited gain because it's a spread, but you have usually a 3-to-1 or 4-to-1 ratio, if not greater, of making money. So I mean, I've set up option spreads where you can get as crazy as 10-to-1, where you're only losing a tenth of what you can make, and so that's pretty good. Alan says AT It says institutions took some profits yesterday from the dollar yen options today, the 110, and AUD, the 75, mostly put options. Interesting. Okay. Yeah, so, it all comes down to the mechanics in this case here. And we've mentioned this for decades now. When people say, "Oh, do you like this or you don't like that, or are you bullish on this or you're not bullish on that," that type of thing. What it really comes down to in the end result is that with options, since the legalization of listed options in late 75 going into 76, it opened the doorway to remove what they refer to as the zero-sum factor. So imagine you're playing cards, and everybody sees you have about 50 cards in a deck that you're going to be playing with, and you can only have so many players in that game. Well, what options did is they took the zero-sum, that's called a zero-sum factor. And, in other words, you have X amount of cards. If you're playing some type of poker game, if you have 5 players or 4 players, there's 20 cards right there, so that only leaves 30 cards. And then if you're playing some type of poker game where some cards are like an open hand, and that could be as much as 50% of the cards are used, not counting the fact when you raise or bid or so forth, and you take another card in, and so forth and so on. So now imagine what options have done. They've made that 50 card game into where you can have thousands of players playing with the 50 cards. And so you have a slice of a diamond ace, and you have a slice of a diamond king, and you have a slice of a diamond queen, and so forth. And so it has almost an unlimited amount of slices you can make. So it's not finite; it's the opposite, which is really far out, And so that's what we're talking about here, is that when someone like Alan, goes and looks at the open interest and looks to see where things are parked, you find out products like this kind of marry that area. They orbit around it. And so that's what we're seeing here now. I hope that makes some sense to somebody, and if not, just we'll try to explain it more. Japan selling U.S. bonds, keeping yields down 100 billion just in the last 8 days. Well, you don't really know what they're long in the derivatives either. I mean, are you looking at the open interest of the 10-year or the 30-year, and looking at the open interest of the strike price? You have no idea. Or a pairs trade. Remember, also bonds, especially the futures contract bonds, are in montage. They're like a smorgasbord of different expirations. 10-year. Okay, yeah. So like the 10-year futures contract might be following something like 7 different bonds of the 10-year maturity, and some might be maturing this month, some might be maturing 2 months from now, so forth and so on. There might be a bunch of different maturities issued at different places, so forth and so on. And so it really makes a change. These are the mechanics that we all need to know. We all need to sound like James T. Kirk. Must know. The end. Must know. And so, what it really comes down to is understanding the physical mechanics, and then you start to understand why some things don't break out. Just like up here, I bet there was an option strike that had this area of the yen at one point, tied up enormously. Matter of fact, June is a big expiration, quarterly expiration. Matter of fact, it usually expires at like the 12th or the 13th or something like that. And look at that. This thing, let's move this over. You can see there was a massive die. It died there for, literally almost half of a quarter. It just sat there and couldn't get out of its way. And it could have been just the open interest alone holding it there. So it's nice that Alan comes in to the webinar to talk about this. It's an important factor, without a doubt. I myself don't really pay attention to it because I have this mathematics, so I don't normally have to use that. The math itself tells me when it's breaking out. But when interest, and you can get it for free, that's the thing. You can find the open interest on these options relatively well and relatively easy. And matter of fact, there was a market technician that was evolving when I was a member at the American Stock Exchange back in the 90s, Chris Cadbury. And Chris followed open interest on a day-to-day basis on different stocks. And it was a lot of insight. AT says, Fed needs a higher dollar to keep inflation down, so dollar yen is going to punish the bears. Yeah, it wouldn't surprise me. They control, one of the old traders was emailing me this morning, I guess, 4 in the morning and 5 in the morning and so forth. And one of the things that came out of those emails, because he sent me like 3 or 4 of them, basically came out and said, can the Fed keep on doing this? And I was like, they have a lot of money. The Fed testimony is going on right now by the Chairman Powell. Yesterday was with the House of Representatives. Today is with the U.S. Senate. And it looks like it might be the old Humphrey Hawkins testimony that's going on. And so what we're really seeing is that the Fed will do things and control things because they have enough equity to do that. They can just print it, create it, and there's nothing stopping them. So, they can, who knows, they could even control some of the open interest on the options. When they lend a lot of money out overnight to a lot of professionals. Can you imagine Citadel, one of the largest successful hedge funds in the world, gets lent like $1 billion and a half overnight for free? The Federal Reserve is doing games like that, where they lend money to institutions around the planet for free. This way it's not like it's spent, it's just lent on a balance sheet. And so it's like they're not creating it, they're lending it, which kind of makes it hide the fact. And then what they do is, those institutions know they need to do certain synthetic structures. What I mean by synthetic, what they do is they buy call options, they sell puts, and at the same time, if they're buying call options, they may be short bonds, or they might be short euros, or they may be doing that type of thing. And what that is a reversal conversion. And when you can do it for free, in other words, you're not paying for the money, you're getting that money for free overnight, then all you're doing is playing the overnight rate. That's all you're really doing in the end result, which is free money. I mean, imagine if someone knocked on your door. Hello, Dukascopy Trader. I would like to hand you $50 million in cash, and you just have to pay it back. Boom. Are you going to tell them to go away, or are you going to take the $50 million for free? Trust me, if you're a incorporated hedge fund or a bank, you're going to take the money for free, and then you're going to go do very conservative overnight trades with it, so that you can hand it back to them the day that they do ask for it. And that's the way the game is being played in finance. Not talked about by the financial media whatsoever. It's not that they don't understand it. They just don't care. They're being paid in some way or another also to keep their mouth shut. Are you getting a kick out of that? Hey, I'm calling you AT now. How do you like that? Alan Tommy. You like that? Let's see. You're getting a big laugh out of this. Okay. Well, wait till they knock on your door. All you have to do is incorporate a fund, or buy a small bank, or become a small bank, and the next thing you know, they'll be knocking on your door and saying, "Hey, AT, would you like this $30 million overnight for free?" I'm sure you'll be like, "Oh no, thank you. I have too much money already. I don't need it." Right? And that goes on everywhere. It's amazing. It is amazing. It is amazing. Hey Moses, how you doing? So, all right, let's get to the rest of the products here. And we this is a currency webinar which bleeds into commodities, like gold and silver and crude oil and so forth. And then when we have some time, we'll drift over into stock indices. Or if you're really hungry, commodities, like corn, wheat, or soybeans, or cattle, or coffee, or something like that. We follow coffee through the ETF and so forth. And then middle age, if you're out there, notice how that weekly is trying to climb back up. Boy, the horse race is it going to climb back up into a weekly buy, and at the same time then turn around and launch itself on the upside. FEMA, I forget what FEMA is too. FEMA. FEMA. That's like for disasters and all like that, isn't it? FEMA? Let me just look it up. Oh my goodness. Paste. And search. Federal Emergency Management Agency. Yeah, that's what it is. I hope you're not near some storm or tornado or something like that going on. So anyway, that's the Swiss. That gives us a general idea of what the dollar is doing. Now let's drift over to, we can look at the Swiss really quick out of the Chicago quant side of it also. See the same thing. The product is trying to move up right there, as you can see. We got a green dot. You can see we're 3 days in a buy right there. There's some strength trying to come in. We're in a weekly buy. Let's see if we can just do this. We'll show you. We're in a weekly buy for since back in here this week, and it closed that right there. It closed right there, and we were in the daily buy. You noticed at the same time. So it was definitely lots of strength coming in. We knew it, and that's how we follow it. That's why the fact check spreadsheet is there. So in other words, you go back and you look on like Swiss, which is line 21, I think it is. Yeah. So right there, line 21 says 4. That 4 is fourth week in a weekly buy. Whereas you could look at like platinum, 7 weeks in a weekly sell, or silver, 9 weeks in a weekly sell. And then you go and we look at the silver contract, and each week as it stays in that sell, we just update it. So in other words, it was 8 last week, and 7 the week before that, and 6, and so forth. And then you can see right here, there we put a line in there. So it went into the weekly sell right up in here. We knew that there was lots of downwardly pressure, and every time we got into a sell, we expected to see some breaks. And then finally it really started to break. And then you can see more breaks. And you can see here we were in a weekly sell from that point, 1 week on the spreadsheet, then 2 weeks, then 3, 4, 5, 6, 7, 8, 9 weeks right now coming in on Monday, and we are now working on the 10th week. And if it would just, this line or this the green line or the histogram would get past the 0 line, then it changes to a 1 on the buy side. And that's how you read our fact check spreadsheet. How many technicians out there put their I guess you'd say predictions, their analysis live on a webinar every day forever? Huh. Yes, indeed. Now here's the bonds. Now look at that. Bonds are trying to get into the buy. They've been in the sell since here, and we've been in a weekly buy since back in here. So it's like 5 weeks on the 30-year bond. Matter of fact, the line should be out there somewhere. There it is. It's even longer. Went into the weekly buy back in May 17th. So it's been a while. It's even beyond 5. It's at 1, 2, 3, 4, 5, 6, 7. It's like 9, 10 weeks ago. So, and that's how that all works. Now, I think we only follow on the spreadsheet. That's line 11. We're following the 10-year. We don't really follow the 30-year. But we have lots of clients that like to see the 30-year, which is interesting. So, used to be the major indice of them all, the 30-year bond. Now the 10-year seems to be more popular. That's because everybody on the planet is with the 10s. All right, now let's get back to the currencies. Let's go take a look at the euro. And there's the euro right there. That has been in a sell since this area here, the weekly sell. So it's at 1, 2, 3, 4, 5 full weeks in a weekly sell. You can see the natural tendency. You go into a weekly sell, Unless it goes back into a buy, the odds are very heavy, 8.5 out of 10 times. It's going to go down in value. It's the way it works around here. FEMA camps coming soon. FEMA camps. Oh no, what part of the country are you in? I know that there's a, you know, the hurricanes are very weak, but they've come in and flooded things out all over the place. Or not all over the place, because there's a lot of drought going on out west. FEMA will knock on the door soon. Hopefully not here in South Jersey. With the ocean temperatures increasing, it kind of instigates another ice age. So people go, how can that happen? If the ice caps are melting, how does that work that it goes to an ice age? What happens is that the weight on the planet gets shifted from the melting ice, and it forces a ice age. The planet shifts physically. So you think, oh my God, it's warming, and obviously SUVs are not doing that. Trust me. All the planets in our solar system are having major issues right now. Earthquakes, which were supposedly going to be dormant on Mars forever and ever, like a million years, are having earthquakes left and right now. I think it's Neptune. It's switched directions in its winds and spins of like 600 and 700 miles an hour. Doc, please do the Turkish against the euro. Yes, definitely. It's one of our favorites. We'll give you the flavor of the Turkish lira right there. You can see it. That's the dollar one. It's been in a daily sell now since this point here. In a weekly buy, but it's the Turkish lira. The Turkish lira is threatening the what is it? It's threatening the weekly sell as we stand. Yo, what's cooking? Oh yeah, Turkish lira. They don't. They don't. It's gone from 1.5 to almost 9. So yeah, I know. Could you imagine the dollar making a move like that? There'd be insurrection going on. Yep. Yep. Bye. So here's the Turkish lira with the euro. Now it went into the weekly sell 2 weeks ago. We find the Turkish lira and the euro much more interesting and indicative to the direction. But unfortunately, it doesn't make as many trades because of that. But it's well worth trading. Through our math. So in other words, we went into a daily sell right here. Right there, went into the daily sell on the Turkish lira. We'll widen that out so you can get a really good view of it. And it stayed in the sell all the way to here. It's gone up and touched the lines and failed. And we're in a weekly sell since here. And so it's been pressured from and it's not really making that big a move, I guess. You're talking about it's going from the 10.30 area down to the 10.10 area. What was that? The low is 10.11.76. So there it is right there. How's that? Does that help you out, AT? I'm in Australia, but we hear things. Yes, you do. Down under, mate. Throw another shrimp on the Barbie. I myself try to go walkabout every so often. All right, let's go take a look at that Aussie. Does this help out? Oh, AT, is that helping out with the Turkish lira, the Euro Turkish lira in particular? Yeah, it's a good directional tool. That's why we like to follow both of them. Yeah, that's the action there. Let's see. Let's drift over to Canadian. It's odd that the two of them have the same trends a lot of times. In this case here, you can see it went into the weekly buy here on Canadian, and it looks like a plane jumping off an aircraft carrier. Zoom. And obviously, you would never take the sells, on the hard delta side. Only take the buys, and notice the wins on the buys are nice. And why fight something that's trying to go up? It's a very insightful day. I'm having a good time. This is I love explaining the math more and more. It's or the how to read the math. It's always a good thing to do, to recap how to read the math, because it's a very simple system. I designed it, as I've said many a time, back some 43 years ago, and it's been very profitable. 10 digits, something like that. 11 digits. Let's see. What's it under a billion? So a million is 7 digits. 100 million is 8 digits. And so under 8 digits, we've gotten out to 8 digits on things. We had an option trade, risked 30,000, and it went 7 digits. Yeah, it went 7 digits. 30,000 made 7 digits, almost 8 digits. It made 2/3 of the way to 8 digits. How's that? That was pretty cool. They're rare and in between, but they happen. All right. What else can we look at here? So there's Canadian, so you can see the strength there. And what we do? We went into the buy. I guess it was right there. Was it 2 days ago? What is that on the spreadsheet? Go down to line 20, going on the third day. Okay, yeah. So we went into the buy in here. Now let me just open something else up. I want to just double check something, because I think we may be running a different one on this one. The one we send out to the clients, sometimes they're mixed up. Where is it at? Canadian. No, it's 2 days. It's not 3 days. So what happened was this histogram didn't make it through the 0 line. So it's only 2 days in a buy. Okay. Not 3. Let's fix that on this fact check spreadsheet. See, we don't hide it. When we screw up, we screw up. It's okay to be screwy. Is that it? Right there, yeah. Line. Okay, there we go. 2. See if that backs off. Yeah, there we go. All right. From there, we drift over to, usually what we do is we take a look at like gold and silver and oil because of those. AT says, Doc, have you been seeing much difference in currency pair correlations? Yeah, we've been seeing that since quantitative easing back in 2008-9. The minor pairs that were very rarely traded are much more liquid than they've ever been before. Also, they're more consistent than they have been before. In other words, they follow technical analysis much more. They follow the open interest much more. Volume has decreased in currency trading by about, I think we used to show that on here every day. It was around 50%, 40%, something like that. The volume has decreased, whereas in stock market, the volume has lost almost 75% since the beginning of quantitative easing back in 2008-9. Basically 2008 when Mr. Obama got into the game as president. It was a tough time. They had policies. The Democrat Party had policies going on for a long while that helped to collapse the financial system, and that's why Lloyd's of London is out of business now, and it's in name only and owned by the Exchequer in London, and Deutsche Bank is pretty much out of business, owned by the German government. Citibank here in the States is owned by the Federal Reserve. Merrill Lynch is now owned by a Bank of America. Bear Stearns is owned by J.P. Morgan Chase. In other words, there's a lot of banks. Bank of Scotland. I can go on and on. Santander. I keep on. A lot of them are out of business, but they're still functioning by name only. In other words, they've gotten bought by parents for pennies on the dollar, and Merrill Lynch I think went for $6 a share or $7 a share. It was a $200 stock before the financial collapse, and before it went bankrupt, American Bank of America bought it and was lent the money by the Federal Reserve to buy it. So it really didn't cost them too much. They kept the balance sheet flat, but you can see, Bank of America fell to $6 a share, between the mortgage problems they had, and but didn't go bankrupt from it. They just overpaid, and then they were given Merrill Lynch by the Federal Reserve to purchase that, and they ended up with Merrill Lynch, the #1 brokerage company in the United States. So yeah, there's been a lot of change in the financial system ever since the collapse of the banking system on the planet Earth. Most of the population has no idea that there's over 18 trillion invested in negative return. Americans are clueless to that fact. I was talking to a history teacher. I've mentioned this in the webinar before. I was talking with a history teacher at a prestigious private school in the Princeton area, and I was mentioning at the time how interest rates might go negative in the United States more, and he said that's impossible. I said most of the planet is negative. Because that's impossible. No, it's not impossible. They just ask anybody outside the United States. So yeah, that's the difference I've seen. I've seen some positives, but to destroy the banking system, to get those positives is not the best thing in the world. But smaller pairs trades are more accurate and much more liquid. That's pretty much the short answer. See, Doc, what about correlation between commodities and FX pairs? When I was younger and a very aggressive currency trader, where I would trade intraday volatility. So in other words, you're not even trading the direction of the currency as much as you're actually trading the volatility of the product. I used to see it be a leader by 2 days compared to what the stock market would do. When it comes to commodities, since the Federal Reserve now controls the metals market and pretty much anything heavily derived in dollars, there's correlations, but the arbitrage that most people hope they could find, the lowest, an arbitrage is usually where you buy one thing and sell another thing, and it's almost a zero risk. And so that the pairs trade side of it is not really a zero risk. But it has made it much more of one since the central banks really fight to keep everything in line in a channel or like an envelope, like as if you're watching a Bollinger Band type of thing, or in this case you're watching Doc's time manifolds. Right here, I know we've had these conversations. You see the time manifolds there. So yeah, for Moses, yeah. Correlations between commodities and FX are there. There's no doubt about it. Also, there's underlining factors. I mean, you can see remember when oil traded negative in the futures contract? So in other words, people paid to sell their oil. So oil went minus. I mean, I'm sure there's plenty of people in the world, in the United States. We're pretty sheltered here, especially with a media that's controlled by the socialists. So they don't, that won't last forever, but it's just the way it works around here. But they don't really talk about these things. So people don't really understand it here in the States. But yeah, there's correlations. You can see it in FX with gold. You can see it. Matter of fact, we like to do this one. We like to go over and look at the South African rand a lot. Let's see if we can find that. Close this. Oh, and yes, the Canadian was the same charts on on my Dukascopy chart page, and the one we use for Chicago Quant. Just a different color background, that's all. Let's take a look at the South African rand against the dollar right there, and you can see this upwardly slope, and it's in a weekly buy. Oop, didn't mean to do that. I guess we could go like that a little bit more, but you see that's the weekly right there, and you can see that trend. It's been sideways up, and then you can go and look at the metals market. Let's go over to the commodities, and there's gold. There's gold. There's gold, and you can see right there. And we'll just make that all the way through. And there's the weekly. Is that the weekly sell? Yeah, the weekly sell. And you can see gold goes down no more than $50 from that sell signal. But I mean, this is the week it started. So it started. Let's see, what's that? The 18th. 19th, so that was the close of that week. We always put the line at the close of the week there. I guess that's the close of the week, right? No, right there. Where's the 19th? Let me go back and look. What is this? This is June. Let me find what the June, end of the week of June. It was the 18th is the weekly, is the Friday. So right there. Now this is the beginning of the week right there. 14th, 15th, so forth. You know, and that's the other week. So it started to go into the sell. You can see right here. It was dipping down most of the week, and we were. I think we. This is a different contract. This is just switched to the August, but our previous contract had us in a daily sell. So the back month gold didn't really reflect it, but the front month did, and I think we caught this whole move here in the other contract, and then the next day it kind of fed in there. So our numbers were down and so forth, and so you can see the metals complex usually works that way. Silver, same situation, except for it's been even longer, and you know, in this case here it closed on a sell this day on this. Now we switched this September just recently also, but this one does reflect. No, I think, you know, we see the histogram as plus, so it's not reflecting the correct sell there either. So the front month reflected it more, but you couldn't be long it throughout this whole move, even with these signals in this daily buy, because why? We're in a weekly sell, so you don't take the longs, you only play the shorts. And if you're trading the options, it's even better, because then you can carry them without having to options and binaries. You can't get stopped out in when you're buying these things. After the riots in South Africa is still holding okay. Okay, yeah, I guess, you know, the issues there politically keep on getting worse and worse, and we see less and less correlation to the South African rand to the metals complex, but it's still dominant. It's definitely still a dominant factor. All right, let's go back to the currencies there. There you go. And so there's the rand. So as the metals complex has been weak, the rand has been weak in the opposite direction. So in other words, it goes up against the dollar, which is losing money. The rand loses money, going from the 13s, the high 13s to 14. See, it went into the daily buy on at 1370s, and you know, you can see that day was 1350, and then, you know, it's been chugging along all the way up until this point right here, and it went into the sell. I know I put these sells in and we lose them. Now obviously you don't want to be playing the short side there, and you only want to be playing the long side. So because why? We're in a weekly buy. So then you go back into it. There's the buy again, and then sure enough you get strength again on the upside, and then you get into another sell there. By then you should have taken your profits, of course. Good money management is the key to trading. And then I guess it's right there, and then it does it in and out, and we're back into a buy again. So you can't take the shorts. The only thing you can take is the longs constantly, because we're in a weekly buy. And sure enough, now we go like this, put that in there. You can use them for other things like taking profits if you want, but do not play shorts when you're in a weekly buy. And that's how we have that 8.5 out of 10. So in other words, you don't have to always be in a position. Now if you're a producer of some form, or you know, a bank or an institution where you have to be in the currency position, we can show you how to pipeline it like you're generating a mortgage for a mortgage broker. In other words, you're generating the pipeline, and we can show you how to do that, but that's not a problem at all. So you can see here another winner chicken dinner win. This case here, a small win. This case here, a bigger win. This case here, a much larger win, and so forth. All right, let's see. And this is live ticking away. So that's not like tomorrow we're going to go to gas line 5 or something like that. There was one time, Dukascopy gets rid of these guys pretty well too. People try to come in and do webinars, and they won't show you charts live. So what happens is that they keep on changing the indicators, and you can see the indicators written on the charts, and they're like 5 hours old. So then and they say, okay, if you follow our system, you'll make money. Subscribe to us. They'll do that type of thing. And so I would go like, okay, can't you put one up there live to show us what's going on? And I would show my charts live, like intraday, like this. Let me go. Let me be a little bold here. So like right here, here's the S&P 500, and so you can see, it goes into a buy with green dots, and it goes up in value. In this case here, you see it goes into a sell. The histogram goes minus, and red dots, and you got it going down in value, so forth and so on. In other words, this is live right now, ticking away. And so now here's the Dow Jones Industrial Average doing the same thing, and you can see, it goes plus, and you get upward direction, you get minus here, you get a break after a couple bars, vice versa, so forth, so on. Same thing here, same thing there, same thing here, same thing there, same thing here. In other words, we show you live action if necessary, if you're hungry for something that you need to know about. So these are the 3 stock indices: the Dow 30, the Nasdaq 100, or on Dukascopy it's referred to as the Tech 100. We'll show you that real quick for everybody outside the United States. Right here on Dukascopy, here's on the J4X. Right there. That's the Tech 100. So, we try to make it real, try to make you be able to appreciate the way things work. We try to be real and back it up with real data constantly, over and over and over again. This way, you don't fall for some charlatan, basically trying to confuse you. We just give you the facts. You make your decision. If, like in the case of, let's go back to the currencies. In other words, if I put my weekly buy signal in, and I have a fact check spreadsheet right here, you can see this whole thing, right? Let's see if we can light this up. This fact check spreadsheet right there, right? So, if I go into a weekly buy and I put it there, it's going to be in a weekly buy for posterity. And then when we finally get into a weekly sell, like we did right here, you can see it's there, and we just keep on telling you each week when it's confirming that it's still in that sell. And so, no surprises, no games, just facts. It's pretty easy to do. I mean, anybody, if anybody wanted to screen share into my machine and they could do the webinar, it wouldn't be that hard. It would be pretty easy. Because, you're just reading the lines pretty much. It's pretty easy for me to do. It's a great hobby. I get a chance to blow off steam. I dislike the way Bloomberg works and CNBC and the U.S. media. None of it is, factual or give you data. So that's what's going on. And so there we are. And then we do the same thing on the dailies with the fact check spreadsheet, shows you the daily action there. Okay. All right. Where are we at now? That was ZAR. Let's take a look at the ruble. And there's the ruble. Let's see. AT says still holding. Okay. Brent oil SEP contract just dropped again. I think we're in the sell in crude oil, or we're almost in a sell. It's not confirmed yet. Last night, I think on the spreadsheet, let's see. Look what happened last night. I hate when this happens. I'm going to show you something that drives me bloody crazy. Data comes in after the closes sometimes nowadays. It's really ridiculous. But here's the chart we sent out. Was that last night? No, that's not it. Let me find it. I'm going to show you a chart from last night that we sent out, and I think it showed oil in a sell. Then this morning I'm going to show you what. Here, let's put oil up there now. Where is it at? Here's crude oil. You can see the red line there. That's what it was. We got a red and a green dot. And last night, let me find one. I'm going to show you from last night because the chart has been updated already. So let's find a crude oil from last night. There it is. No, that's not it. It's live cattle. Come on, crude. There's one. Found one. Okay. And here it comes. It'll jump up on the screen when I double click it probably. View. Nope, didn't work that way, did it? Alright, so let's cancel that out. Alright, let's do it this way. There we go. Here it comes. It'll come up on the screen now. There you go. So last night, this is how we sent out the charts. With crude oil in a sell. Right there. Right there. Okay, see that? Now, let's just move this down and take a look and see how they changed the data. They took out these lows, they shrunk them down, and ended up giving us a red and a green, and it had an effect on the histogram. And so now, you can see, whereas last night when we sent it out, and you thought, okay, it's safe to be short, but you can't be short. Why, traders? We're in a weekly buy still. So one thing's for sure, you're not long. You know, in other words, you're not long for this move. And then today, you can see it's moving down again. You know, and so we're going into the sell, and you don't really want to try to short that. You just don't want to be long it. So in other words, when you got long here, you had some opportunity to get out of it. And we've seen the same craziness here. Remember this back about a week or two ago, something like that, where, you know, we're in a weekly buy. We keep on getting these red dots. I keep on saying, don't panic, just let it play itself out. And sure enough, it rolls over, breaks this line here, and goes down and makes the lows. And the math is screaming at us over and over and over again, even with it moving up for a couple days. It's like, no, don't trust, don't trust, don't trust, don't trust, don't trust. That's all it's screaming at us. And I said, I threw a circle in there. Robin asked me a couple days ago, why is that circle still there? I said, it's a good example. You know, follow the math. Don't follow anything but the math. So, there we go. I'm just going to erase, close. And so, it's a perfect example, you know, with the oil. Last night they were breaking it down. Somehow or another, someone comes in and changes the volume, and changes the high and the low, and that's exchange prices now. So the exchange prices change, and you know, whatever it does, or from the brokerage house to the exchanges. So it's wacko when it does that. So this morning, this is the live one. You can see right there, it's, you know, it's lower and challenging the lows of yesterday, allegedly, right there. You see right here, if we close like that, you know, it'll be in a daily sell, and obviously, you know, we're in a weekly buy. You need this to break down right here, and it doesn't look too much of a breakdown. At most, it's banging against the time manifold, what we refer to as the nonlinear time manifold. We measure time differently, so that's no surprise, AT, that we were expecting weakness in the oil complex, and we're getting it. Last night we projected it. Where's that at? There it is. Last night we projected it very clearly, and today it's doing it again. So there that is. There she blows, the great white whale. Yes, indeed. Let's see, what else can we say about that? And so that's what's going on there, is that the the August contract in crude oil is weakening. So, lost the power down there?
Yeah.
Yeah, you can you can borrow a cup of bandwidth and so forth with no problem. You need help?
No, just keep back on.
Okay. Yeah. All right. And so, well, traders, let me think. What else we got going on here? So that's the crude. Let's look at natural gas. I found that kind of interesting, as natural gas was doing the same exact thing. You can see right here, uh, you know, went into a daily sell yesterday also, and you can see we got the volatility signal the day before that, and it also broke down. So you knew that this was trying to break down. Now this product is not, I mean, I repeat, not that weak. We've been, you can see here, we've been in the weekly buy since like since April. What is it? It's over a quarter ago now. You know, in the 275, 280 area, right? This product has traveled in that weekly buy. What is that? 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks now. And you can see it on the fact check spreadsheet. That's line 10. See that there? On line 10. Where's it at? Right there. 13 weeks now to nat gas. And, you know, it's gone all the way up to from 275, 280 area to 3 something area. What's that? 370 basically. Just on the edge of 370. 369. No, 380. Oh, yeah, so it's gotten up into the 370s easily. So it's almost moved up a whole $1. Wow. So, you know, some interesting action there. Let's see, where are we at next? See what I mean, traders? You wonder, why does he waste the time doing this? Because I can bitch and complain about the rest of the news media. That's why. You know, I'm documenting. Look, sooner or later, the truth is going to come out. All right? The truth will, it always sets you free, and it's going to come out. And this constant fake out by the media and so forth about what's going on in reality is, you know, the bigger question is, why isn't anybody else reporting it the way I report it? And that's why, you know, Dukascopy gives me that opportunity to tell the truth. They're not afraid of the truth, Dukascopy. You know, why isn't everybody else that brave? And so that's what it really comes down to, is that this is a venue that's easy. I don't have to worry about the hacking and this and that. And I do have Chicago Quant TV. I just don't, I have it set up. I don't use it. Instead, I use Dukascopy. It's a lot easier. I don't have to think about it too hard. And so, I mean, I like to trade. I don't have much of a desire to marry work, you know. Work? I don't do work. If I'm going to do work, I want to be like digging ditches and farming and doing real manly work, you know. So, you know, doing hard sweating work for an hour or two, especially when you don't have to do it. It's one thing when you got to do it to be paid, but when you don't have to be paid and do it, it's a pleasure, because you know you can walk away from it. So you can work really hard and know that you don't have to do that if you don't want that. And so using Dukascopy, it gives me an opportunity to talk about the markets and complain about how the other media or other professionals are hiding the news, and sooner or later the facts will come out. I loved it. What was it? I digress here. I loved it. What was it, about 6 months ago? Bank of Scotland, the Exchequer owns the Bank of Scotland. And so they floated like, I don't know, almost 7% of the stock. And the people in Scotland were nuts. They were like, how dare them? And first of all, how can they sell 7% of our company? It's like, no, your company went bankrupt and it's owned by the Exchequer now, like the way Lloyd's of London is. And so they were just, you know, the stock was up and they sold off some of the inventory. And then there was silence. And do you see the media explaining it to the public? No, they didn't say a word. They were like, you know, like clams on the bottom of the ocean. They just were closed. They didn't say, oh, by the way, Bank of Scotland got in trouble because the crazy politicians allowed the banking system across the planet to collapse, and now these negative interest rates and the Exchequer and the Federal Reserve and the ECB, the European Central Bank, and the Royal Bank of Canada and the Royal Bank of Australia and the Royal Bank of Australia and the Royal Bank of New Zealand and the Royal Bank of blah, 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 blah. You know, they don't open their mouths. Only Doc here whines about it every day. You know, I mean, I'm the one that's out there complaining. They are. I really do like the Swiss banks. You know, I always get sad when I see them get trapped in some position, you know. I really do. I am so happy with the Swiss banks. They let it flow, you know. And so I have the Chicago Quant TV, and I don't turn it on. I got it all set up. I have no reason. Dukascopy lets me play every day. I'm out here for an hour. Sometimes I'll do, if people have more questions, I have room on the opposite side of this. I end up talking into the US Open a little bit, and then I jump off to work. That's real work, trading. Especially when I just chase my numbers. So, yep. That is the story here, traders. So why does somebody with this much knowledge, you know, Robin and I, do this stuff? Well, we do it. We've opened up a website even, but overall, you can come right to Dukascopy every day for free. What's the difference? You get a chance to ask a question. All you have to do is tap it into the chat line, and I'm not afraid. I've said to many cyber traders, Dukascopy traders, there are no stupid, dumb, or irrelevant questions when it comes to money and trading. All there are is short answers or long answers. So in other words, ask anything. Okay? That's the name of the game, really, traders. Is that we both Robin and I have as much experience, and we're old guys. I remember it was like Gitta and and Polina, and they thought we were young. But it took it like a year. Polina was like, "No, you're not 58 years old." That was back then. I'm 66 now. It's like, no, you're not young. I mean, you're not old. You're like 30. It's like, no, I'm not 30 years old. I'm like an old retiree who trades every day. It's like, or boat or do whatever, But I mean, old traders don't go away. They trade. The better you are, the more fun it is. So it's just what we do here at the Dukascopy webinar every day in currencies. We look at the truth. Be wrong or right, it's right there. The fact check spreadsheet is there to tell me that I've done something stupid or put the wrong number in, or the charts tell you if it's good or bad, and it's the whole gig. What's that? That's nat gas. Let's jump over to a currency before we get out of here. This is a currency webinar. Let's check out the Mexican peso. We follow a few of these products that are interesting. You can see the peso has had some interesting moves. We were thinking that we're going to see another one of these when we started to see this thing climb into the weekly buy here. This thing looks like it's going to close in the weekly buy tomorrow. We'll see how it plays. We went into the daily buy here, and it's still in the daily buy, but it is only really lost. But then you couldn't get long it. Why, traders? We're in a weekly sell. So if nothing, you're neutral at this moment. And right there was the daily buy, and then it tried to go down. Notice, let's widen this out so you can see this a little bit better. So you can see here, the white line and the histogram are all plus. They're above the zero line here. Can you see that? I think you can see that, right? Yeah, right there. Yeah. And so, and now it's starting to climb up. You got this thing for the last couple of days fighting its way to stay in the buy, going after the time manifold. And we'll see if it does this. Now that was a really neat launch. It went into the buy here after this nice little sell-off, and it was a nice winner chicken dinner. And this thing has a really nice, notice the distance between the buys and the sells. It's that sell is there really. It should be down here. But it is a really good trading product, the peso. And to answer one of those questions, the currency pairs have become much more predictable. They really have. And that's probably because the central banks are keeping them where they want to keep them. All right. Well, I'm going to go trade. Unless somebody has a question, I'm going to get out of here. I am the singing trader. So I end the webinar with a little song because before we jumped over to YouTube on Dukascopy, I used to play a song, but we get in trouble whenever you use anybody's work. You're allowed legally to play a song for under 15 seconds, but YouTube is crazy. They'll block you for a month or something. All right, this is Doc from North America saying aloha. Happy trails to you until we meet again, which will be TTIF. tomorrow. Excuse me. Happy trails to you, to all our cyber trading friends. Aloha.